Hey everybody, hope you're having a great start to the weekend. So today I'm going to be talking to us about the month of November and what sort of dividends that I got for the month of November. I know you're probably saying to yourself, Matt, it's the 22nd or 23rd whenever you're watching this, but the only thing that's really missing from the account at the moment is money market sort of stuff, so just the interest that I get from the cash that's in the accounts, and that's relatively minor, as you'll see when we kind of do a step through. You can see I'm pretty upset. There's one position in my portfolio at the moment that's not reading appropriately. It's Cheniere Energy Partners, and so the portfolio is a little bit off, but it should be around $370, maybe a little bit more, $1,000 in the portfolio, and just got up to $926 per month in cash flow every month on average yesterday. So what you'll see today is slightly below average, and that's just based off the fact that the second month of every quarter, generally speaking, is my second highest paying month of every quarter. So it's not the lowest, but it's not the highest, and so you guys will see that as we kind of run through. Here's really the distribution of the portfolio. As you can already know, the energy sector is somewhat down because of the issues going on with Cheniere Energy Partners and it not pulling correctly. So all the others would become a little bit smaller, and this yellow piece here that I'm kind of highlighting on the dividends on the left, portfolio value on the right, would be slightly larger. Probably no more than 30% in terms of dividend value, and portfolio value would probably be closer to the 22-23% because we're missing about $6,000 worth from that actual position. So far so good, but actually going to what dividends were received, and you'll see something similar. Everything's kind of falling through. You can see CQP just destroying absolutely everything. But it is what it is. It actually paid me this month as well, about $78 or so. But let's zoom in really quick so we can kind of get a better view, and I can show you guys what companies paid me this month. So I'll zoom down a little bit so you guys can see specifically November here, and we can go through piece by piece. So at the moment it's around $779. I'll turn this red once these I'll turn these reds once these actual money market accounts kind of come through, but you can see at the most I'm going to be getting $3, and at probably even then it'll probably be less because I just added $1,500 to the account a little bit last week, so this will probably be in the $2 range, not even close to $3. Because interest rates are going back down again. But that's a different story for a different day. You guys can see I got $109 from Abbvie earlier this month. I believe it was on the 15th or so. BPMP got that paid directly to the account, $168. Not reinvesting that because I have a large energy position already. Caterpillar, reinvested that bad boy for $39. $78 from Cheniere Energy Partners. I am actually dividend reinvesting this one. Not exactly too sure why I'm investing that one but not the others, but hey, it is what it is. $30 from Kinder Morgan, $28 from Main Street Capital, $5 from Realty Income Corp. I have about 20 shares of that. Stag Industrial up to $15. AT&T up to $112 a quarter. Verizon up to $66 a quarter, which isn't bad. Nothing from my YouTube Moolah account. And Main Street Capital again in my Roth IRA. Verizon again in my Roth IRA for $21. Nothing in my M1 Finance account. You can see this. Oh, I didn't add Visa in here. Maybe it's because it's not going to add me anything. Let me see. Did I add Visa for next year? Nope, I got to add Visa in here, but I don't think it's going to pay me at all. So, and if it does, it's definitely not in November. So you also have the computer shares account. Nothing really too much in here except for Realty Income Corp paying me $1, Clorox paying me just under $5, Abbvie paying me just over $5 or so, $5.34. General Mills paying me about 99 cents. Procter & Gamble paying me about $3.86, and Cardone Capital paying me $56.25. It has been, and I readjusted, for those of you that might have missed it, readjusted this down to the 4.5% monthly payout range. It was aiming for about 6% because that's basically what I was kind of told to aim for is about a 6% yield. So that would have been about $75 on a $15,000 investment, which is what I have in Cardone Capital. But because that it went down from 6% to about 4.5%, we lost a decent chunk, and we went down about 25% from 75 down to 56.25. So I'll only end up at about $281 for the year. It was supposed to be around $900 a year if that were to follow through, but now it's down to about $675. So I've lost a decent chunk there, about $225 worth, but in the end, it's still $600 some every single year that I'm going to be able to depend on, and hopefully next year rents will raise and we'll be able to actually get something that is more along the lines of the 6% range, but I will keep you guys posted on that. And because I spent a decent amount of money in the October timeframe purchasing stocks like Caterpillar and other great dividend paying stocks, I didn't have much money in the account when it came to actually get a interest payment monthly from my Amex personal savings where I keep my nest egg. And so basically didn't really get too much income from that. But that in total, just from dividend income, is around $779 from dividend income, which is probably one of the better months for the year, but overall not the best. It's better than January. March was better. June was better. September was better. So at the moment, it is going to be the 5th month of the year, because in December we're hoping to hit that $1,200 mark there, which is pretty amazing if you ask me. Curious what next year holds, what September and March look like. So March is going to be looking at about $1,300 or so, and September is looking at about $1,400. So hopefully by the time I get there, it'll be about $1,600. We're hoping next year, I'd show you the goals, but the goals are going to be messed up because Cheniere Energy Partners is screwing some stuff up. But definitely we'll get close to this $9,000 for this year in terms of dividend income. Let's see where we're at the moment. We're about $89.75, so I don't think we're going to get there because we only have about a month left, and I don't think I'm going to invest in anything that will get an ex-dividend date before then and a dividend payout before the end of the year. So very close. As you guys remember, the goal was $85.25 for the year. So with respect to that, we beat it by about $450, which is pretty good. It means I was able to get a little bit more, and I was pretty nervous about the $85.25. It was a huge jump up. But you can see with the increase in capital size of the portfolio, we're steadily decreasing the amount of actual year-over-year dividend growth. So 2017, we were looking at about a 73% dividend growth from 2016 to 2017. 2017 to 2018 was 62%. Last year, or this year that we're in, from 2018 to 2019, we're at about 58%. And so next year we're at about 20-something% at the moment, just because of the capital that we've invested throughout 2019. But what I'm aiming for is about 56% increase, which is going to be huge. The portfolio at this point, the dividend aspect of it is over $250,000. So to increase that by 50% means we're going to have to invest close to, if not more than $100,000. And so that's got me a little bit nervous. But that being said, I do have time on my side, and we have dividend growth, as well as the fact that I have 4 quarters of dividend payments coming through. So like I said, we're already up a decent chunk of that, just based off the fact that I've been investing heavy in 2019, and now we have 4 quarters worth of dividend payments. We still have dividend growth coming through as well. Last year I averaged about 8% dividend growth. So just off the fact that we have 11,000 at the moment, which you're not able to see because some of the errors here. But the 11,000, 8% dividend growth, that itself, if you were to be able to get 4 quarters of that, 8% off of 11,000 annual dividends, that's over $800 of growth just from that. So if I'm able to continue that 8% dividend growth as well as reinvest that $11,000, that $11,000 with the 4.5% dividend yield that I have on the portfolio at the moment, you can see that this dividend yield is about 4.5%. Let's just say that's $450 if you were to have a $10,000 annual dividend. So just from that, the $800 from just the dividend growth, and then the $450 or so from the reinvestment, 2021 is already up, say, $1,200, and that's even before I add any additional capital. Now, keep in mind, that doesn't help me in 2020, though, because those dividend growths and things along those lines will be coming through in 2020, so you won't be getting 4 quarters worth of growth, but you can kind of start to see how just from not even investing additional capital, the dividends will continue to grow. Just from reinvesting dividends, I'll have $450 extra in annual dividends a year, and just from the dividend growth, over $800 year over year. So if we're able to consistently keep on those trends, the 4.5% dividend yield and the 8% dividend growth, we're going to be starting to look pretty good, and it's going to be like I have an additional person helping contribute to the portfolio. I mean, just think about it. Next year on its own, if I were to reinvest all my dividends, pool all my dividends, that's $11,000 that I am adding to the portfolio. I mean, that's just really astonishing if you start to think about it that way. Sometimes, you know, I'm very fortunate at this point that I'm able to do something like that, have $11,000 that I can contribute on my own free just by previous investments, being able to contribute to the portfolio. You can see a lot of these links are broken just because we have the Cheniere Energy Partners thing going on, but you think about it that way, it's just going to help skyrocket, and you know, hopefully by the end of next year we'll get to 14,000, and that 14,000, think about it, another 8% potentially on that. We're getting close to over $1,000 just from dividend growth year over year. And then you start thinking about reinvesting $14,000 at 4.5%. You're getting close to $600, $700, and then you start thinking about it. It's like, wow, okay, so just $1,600 just from that. I mean, it starts to really, really help yourself out, and then you start getting to the point where you get into the $20,000 range in 2021, 2022. If I'm able to meet these increase objectives, we're really going to start skyrocketing the portfolio. You can already start to look and see, I know it's somewhat messed up here, but you can already start to look and see the kind of exponential growth we've had over the past couple years. And yes, the link's a little bit messed up, but 2012 is kind of when we started. We're already up in 2018 over $5,000. Here we're getting close to the $9,000 mark. Before we even enter 2020, unless there's dividend cuts or anything like that, we'd be up to $11,200-ish or so dollars. So this would, you know, still be climbing and be up about, you know, 25% or so from here, and hopefully going to be able to increase it another 25% or so, getting close to $14,000. So just think, if I'm able to continue up that trajectory, these are really starting to build on each other. And a lot of that is me helping increase my savings and savings rate year over year. But also I think it's a little bit me being more conscious about what I'm investing in, and also the fact that I have the dividend reinvestment kind of coming through as well. So that's really it for this video. Almost $800 or so. Haven't gotten all the YouTube income, obviously, because I still have about 8 or so days worth, or 9 or so days worth of ad revenue to kind of come through, but I'm on track to get close to $200, which is the goal for the month. I haven't hit $200 yet, and in fact, I think just based off of what I'm at the moment, I'm close to $140, $150 or so, maybe more. I think I'm definitely on track for my best month yet. I think I've got up to $160 in revenue before. But $200 is the goal. I'm really on track. I think I only need to make $3 or $4 a day in ad revenue to get there at this point. So fingers crossed, I'll give you guys an update. $200 is kind of that next milestone. I'm hoping really to blow this thing up and get closer to the $500 a month range, so I can continue to add to the portfolio and share that with you guys. Because as you guys know, I don't take that money and spend it. I reinvest it. So at the moment, we have about $2,400. Hold on. We have about